today we will be discussing the market trading system, and this is one of the instruments, market instruments for regulating your pollution. So, broadly we have learned our contents, and that we need to discuss what is the emission trading and what is the emission tradable emission permit. Then we will be discussing how this initial permit, tradable permit is decided, and there we will be talking about two different mechanisms. One is auction pollution permit and second one is free pollution distributions, free permit distributions. And again under this free permit distributions, we are generally using two methods, that is the first one is grandparenting and the second one is benchmarking, that would be discussing. And lastly we will be discussing different types of trading systems. The first one is your offset trading, then emission rate trading and cap and trade. So, this is the broad overview of our discussion for today. So, let us discuss with the very meaning of emission trading. So, what is the definition meaning of this emission trading? Obviously, when you are saying that it is trading, it involves buying and selling, right. So, it involves the market mechanisms, but here this is not a typical case of buying and selling. So, here the item sold or the material sold is emission or pollution itself, right. So, that is why the name is emission trading. So, you can define this emission trading as a mechanism, right, where the government is setting the upper limit for emissions, right, and accordingly the government defines what is the permit, what is the number of permits, or permits are also called as the allowances that to be emitted, right. But these upper limits of permit, right, or allowances are given, are kept or are fixed by definite limit. That limit is as per the government overall limit, right. So, after understanding this emission trading, let us understand what is the permit itself, tradable permit, because government fixes or settles what is the number of permits, right. So, here we can say this pollution permit is a kind of instrument, right. And what instrument? This instrument is giving the legal right to the concerned polluting agencies, right, to pollute a certain amount of pollutions or emissions. Okay. And what is tradable permit here? Here the permit can be traded. If you are having surplus permit, then you can sell it. If you are if your pollution is exceeding, that means you are lacking the permits, then you can buy from the competitors or buy from the market itself. Okay. So, in tradable permit, we are allowing the polluter to buy and sell the right or appropriate amount of pollutions, and thereby the pollution control authority it can hold the number of emission permits, and accordingly the apportionment of permits will be done. So, suppose if a firm has to emit pollution, then obviously the firm has to buy the permits, right, so that it can pollute or so that it can continue production and pollution. And here the price of the permits it can be represented in terms of a tax on the emissions itself. And again, if you see the very nature of this tradable permit, then you will be finding it is a mixture of quota systems and tax system, Pigouvian tax system. So, why it is we are saying the quota system? Because here the regulating agency, it is fixing the upper limit of the pollution. So, in that way the permit how much unit of emission is granted, that is fixed. So, it is a kind of quota. And then if you are if the polluting agency is crossing this limit by one more unit or two more unit or likewise, then a tax is imposed. So, that is why this tradable permit is treated as a hybrid of this quota systems and the Pigouvian tax systems, right. And if a particular firm has to pollute more than the initial permit it has been assigned with, it has been granted, then obviously the firm has to purchase more permits from the market itself, and then only he can continue, the firm can continue pollution and production. Okay. So, this is how in a nutshell the very meaning and the process of tradable permit is concerned. So, now the question is how this initial permit is decided, right. Obviously, you are saying that so far the allocation of permit is concerned, the government or regulating authorities settles down, discusses and settles down that what is the maximum number of permits that can be granted. But what is the initial permit decided? Because there is no, we do not think that in a market, competitive market, only one industry or two industries are polluting and producing, there may be many. So, in this case how the government or regulating authority is going to apportion this limit of permit among or between the existing polluting units. Okay. So, for that reason two basic mechanisms are followed. The first one is known as auctioned pollution permits, right, and the second one is known as the freely distributed transferable permits. Okay. So, we can say from this figure it is clear that this initial permits is decided, right. So, the overall permit amount is decided, that what is the maximum number of pollution can be accepted, but how to distribute, it depends on the two mechanisms, that who is going to get what number of permits. So, the first mechanism is that it is through the auction itself, right, and the second one is it is freely distributed. But now the question is, auction is understood that when a firm is thinking that it is going to produce more and pollute more, then obviously it has to pay more for permit. So, that is how the auction will be working. But for in case of free distribution of the permit, then how it is going to work. So, now let us discuss with the first case, that we are talking about the auctioned the pollution permits distributed under auction systems. So, here the government auctions off the number of permits that is already granted by the regulating agency itself. So, here we can say that this method of pollution distribution is a kind of efficient means of getting the permits to the respective firms, because which of the firms or industry they are valuing this permit the highest, so then only they can pay the highest amount for the permit itself. So, what is the meaning of this? So, it means that if a particular firm is planning that for this financial year we are going to produce this much of production, and that is why the pollution would be high. So, accordingly the firm will be paying the highest price for the permit itself, right. But and in this mechanism, the beauty of the system is that, or the beauty of this method, auction permits method, is that the government can also get revenue out of these auction systems, right. And this method therefore can generate a sustainable kind of systems, right. It can generate revenue and rewards the early actions and promotes the carbon market, right. So, when it is promoting the active carbon market or active pollution market, you are saying, and this carbon market is a part of your pollution market. So, thereby the price of the carbon itself, it can be rebuilt. Okay. So, when you are practicing this auctioned mode of pollution distribution, pollution permit distribution, then the first benefits that we are finding, that it is generating revenue. So, the government can get the revenue. Second one is that it is promoting the active carbon market, and the third one is that we are finding the price of the carbon, what is the price of, or what is the value of these emissions that the polluting industries they are putting. So, now let us discuss the second method, of distribution of these permits. So, it is known as freely distributed transferable permits, that it is freely distributed without any charge. So, here the government actually setting the limit of the pollutions, that what is the maximum upper limit of the pollution that can be generated, and distributes this permit by fixing the aggregate pollution goals, that for farm 1, right, if there are n farms. So, for farm 1 what is the maximum limit this can produce or this can pollute, right. So, likewise up to nth farm what is the maximum limit. So, there we are actually the government is fixing the aggregate pollution goals, that suppose say this number of pollutions in terms of units is, let us say 1000 units. So, accordingly this is fixed, this aggregate pollution goal is fixed, and accordingly this one is set. So, here the farms they actually do not have the right to pollute n number of pollutions, but they need to emit a limited pollutions without any charge. So, that is what we are saying, this is freely distributed permits. So, here the limits are set, but they are not chargeable, right. We cannot say that because they are the permits are not chargeable, the respective industries or farms they are allowed to pollute n number of pollutions. No, this is not. So, this is the very simply we are saying that here the farms are not allowed to pollute n number of or unlimited amount of pollution, rather the farms are allowed to emit a limited pollutions without any charge. So, that is what the freely distributed transferable permits are meant. And again, once this initial amount or initial endowment of this distribution is fixed, then the trading may happen, that who is actually exceeding the limit, and in that case the farm needs to purchase from the other and vice versa. And next question is that what are the different methods for this free allocation, right. How the government is even freely allocating the farms. What is the method? Is there any system or is there any mechanisms or rule that the government is following in order to distribute this permits free of charge? What is the basis? So, the first one, the first method is known as grandparenting, and the second one is known as benchmarking. So, the government can follow either of these methods in distributing the permits free of cost. So, let us discuss the first one, grandparenting. So, what is the meaning of grandparenting? So, in this case the respective farms or industries they receive free permits, right, and these permits are based on the historical emissions from the specified period. Let us say we are talking the specified period, reference year is 1990 for a particular polluting farm. So, taking and for that year, right. So, let us say the emission amount is X, right. So, based on these now the government can distribute the permits as per this method. So, here the permits are distributed based on the historical emissions from the specified period. So, from 1990 onwards, what are the emission level? For 91, what is the emission level? 92 up to let us say 2018. So, accordingly, depending on this number of pollutions, right, whether it is in 90s, let us say it is 120 units of pollution. For 91, let us say it is 118. For 92, it is 1110. And for likewise, for let us say 2018, it is 90 only units of pollution. So, depending on this historical emissions data from a specified year, the government decides that what is the amount or number of permits that needs to be distributed to a particular company. right. So, here the in the from this picture it is clear that we are taking it this ratio, right, and we are setting that what is the different historical emissions. Okay. So, accordingly we are specifying from the base year what we are setting the limit, right, and then we are finding that then we are actually distributing these permits to this particular farms. So, now let us discuss the second method, that is the benchmarking. So, in case of benchmarking, the farms or the industries, they are also receiving this free of cost permits, but it depends on certain criteria. So, what are the criteria the government follows in distributing these permits? So, it depends upon certain benchmarks. So, what are these benchmarks? These are the performance standards that the farms are taking into account in their production, and emissions intensity of the product they are producing or in that particular sector. Okay. So, you can say that in this benchmarking system it is actually addressing the question of fairness, that which of these companies or industries, if they are following a set of performance standards, right, or depending upon the emissions intensity, the permits are distributed. So, that is why this fairness issue is taken into account in these systems, right. So, here we are talking about this benchmark systems, right. So, there we have taken into account this benchmarking in terms of the standards, that which standards for this is for the first, let us say first farm, this is for the second farm, this is for the third polluting industry and fourth. So, what is the benchmark standard, what kind of performances performance standards each of these farms they are taken into account in their production for abating pollutions, or what kind of technologies they are using for reducing or controlling the pollution level, right. So, depending on it the government is going to distribute the permits. So, now let us discuss the merits of this free permit distributions, right. So, here we are saying that when the permits are given free, right, these are treated as a compensation for the farms. Why? Because obviously it is a compensation for the farms, because if they are taking any kind of the existing carbon intensive infrastructure or processes, right. For that reason you can say it is a kind of compensation. And moreover, this free allocation of permits, it can also be used to protect industries from potential loss of competitiveness from the loss. It can avoid the potential loss, or it can protect from the potential loss. The third one that we are also need to take into account for free permit distribution is that these industries who are getting this free permits, they are incentivized to invest in low carbon technologies, right. So, further they can also control the pollutions, because for the time being they do not have to actually pay anything for getting this permit, and that is why it will be treated as an incentive for investing further in the low carbon technologies. So, that is also an important aspects in the free permit distributions, right. So, when these farms are taking into account this investment in the low carbon technologies, thereby they will be reducing their emissions, right. So, when they are reducing their emissions, they will be having the surplus permits. So, they can now sell this surplus permit, right, in the market and get the revenue. And if they are going to increase the emissions, then obviously there will be a deficit in the permits, and this deficit of permits will be in terms of buying the permits. They need to buy the permits. So, when they are going to buy the permits, then obviously it is going to incur a cost to the respective firms, right. So, because of this logic, we are saying that when free permits distributions are there, these permits are distributed freely to the polluting industries, then it is going to incentivize to invest in the low carbon technologies. So, now let us understand what are the different types of trading systems that we are finding in the literature or practice. So, we will be discussing three important types of trading systems. The first one is known as the offset trading, then we are having this emission rate trading, and the third one is cap and trade. So, let us discuss the very meaning of all these types of trading system one by one. So, what is the offset trading? So, the meaning of this offset trading is to balance, right, to balance the trading itself. And the basic objective when it was actually formulated, the basic objective was that how to achieve this pollution reductions and simultaneously we can continue with the economic growth and expansion of output and production of the goods and services. Okay. And when you are targeting for its the very mechanisms, right. So, the very mechanisms targets that the new firms who are entering into the productions and also they will be polluting, these new firms they must pay the existing firms, right, to reduce the emissions level below the standard, right. So, this activity will offset or balance the added emissions they are going to create, and in that way you can say the net of pollutions will be balanced, right. And if you see the examples, then we can find that for the first time we experienced this situation in the Southern California case, and there we observed that although almost all the companies and polluting industries they followed the regulating authorities standards and limit, but still the pollution was not controlled. So, from the very experience at that point of time during 1970s, we found that what is the reason behind it. Every existing polluting industry it was following the standards and it was subject to the regulation itself, but still why this pollution control could not be successful. So, that is the reason, that is the actually historical background. This offset trading was created at that point of time. So, there we talked about that we need to reduce the pollution level and simultaneously the economic growth and the new entrants of the industries must be there. We must be allowing the new industries and firms in order to expand the output and production, and simultaneously we need to achieve the pollution reduction itself. And moreover, the so far this offset trading is concerned, it may be taken as a voluntary agreement or it can be in terms of the regulatory control itself. So, we can take this example from the UNFCCC, United Framework Convention on Climate Change. So, there we are finding an instrument which is known as the Clean Development Mechanism CDMs under this Kyoto Protocol under the UNFCCC. So, this CDMs in the Kyoto Protocol, they are also the example of the offset trading. So, another mechanism is emission rate trading. So, what is emission rate trading? So, it is expressed in terms of the rate that a pollutant constitutes in total output that is produced. Okay. So, we are concerned here the rate of the pollutant. So, we can take this example, suppose say in the greenhouse gas emission, right, we need to define what is the rate. So, in greenhouse gas emission rate, it is defined as the tons of carbon dioxide per 1000 megawatt hours of power productions, right. So, that means what is the amount of CO2 production for every 1000 megawatt hours of power production, and that determines the rate of greenhouse emissions. So, if for every pollutant, if this rate is found, then we can actually set this rate, and this is the base rate that is set as per this, and then only the trading is possible between the sources or among the sources. So, now the emitters who can emit below this base rate, let us say this rate is fixed now, this is the standard rate for this greenhouse gas emissions. We are saying this is what is the 1 ton, let us say 1 ton of CO2 is produced for every 1000 megawatt hours of power production. Okay. So, that means now the base rate is decided, right, and if a particular industry, let us say firm 1 who is producing this power, if it can emit below this rate, that is let us say it is less than, let us say 0.08 tons of CO2 is now produced for every 1000 megawatt hours of power productions, right. So, that means this is the base rate, it is the standard rate, and a company is producing much below, that is less than 1 ton of CO2, that is 0.08 ton of CO2 for every 1000 megawatt hours of productions. Then what will happen? The firm is having its surplus, right. It can sell this credit, or this surplus is expressed in terms credits. So, the firm can sell its credits to other firms who are emitting above this apportioned standards, that is 1000 CO2 per 1 tons of CO2 per 1000 megawatt hours of power productions. Okay. So, the last mechanisms, that is known as the cap and trade. So, what is cap and trade? So, that means we are putting a upper limit, right. So, here the regulator is setting a upper limit for what is the overall emissions, and then it can allow trade among the polluters, so that we can determine who is emitting what amount of pollutions. And if you see the very structure, then you will be finding that this system, particularly cap and trade, is a kind of more decentralized system. Why it is more decentralized? Here the cap, the overall limit of production, it is decided by the regulating authority or regulator itself. Then each of the states, they are responsible for setting their own national emission cap. That is why it is known as a more decentralized kind of systems. And moreover, this trading is involving a price or a value on a permit to pollute. So, you can say that this trading acts as an incentive to reduce the pollution, right, because the firms now realize if they are going to pollute, then this pollution, creating pollution is an expensive activity, right, because they need to pay for it. Okay. And for polluting firms, if they are producing less pollution, it means they are requiring fewer permits, right. So, what is the opportunity cost? So, the opportunity cost here is that if they are producing lesser pollutions, then obviously they will be requiring lesser permits, right. So, when they are using lesser permits, right, then obviously this the surplus permits, now it can be sold in the market and they can get the revenue for that. Okay. And for this portions you can follow this field and field chapter 13 of this book, and moreover you can follow this article allocation, how emission permits are distributed. It is a policy brief, so you can also follow that. Okay. In the next lecture we will be talking about the cap and trade in detail, along with the liability as an instrument to control the pollutions.